Hello everybody, hope you're doing well. It's Lane here with MetaShackle. I'm still having a few issues with my computer that I'm working through, but I wanted to put this quick video out. Looking at the Fear and Greed Index chart, you can clearly see that we're running at 20 right now, so we are officially at the threshold of extreme fear. Now most people, when they're investing or buying assets, especially when they're trading, they actually have a backwards mentality, and I used to be guilty of this same thing. And no matter how much you trade or no matter how much you invest, you are constantly fighting this natural instinct to do the exact opposite of what you should be doing. Most people, when things are going well and the price is going up, and this chart especially is in the greed or extreme greed area, people feel euphoric, so they tend to buy in euphoria. But that is a horrible thing to do, because what they should be doing is selling into extreme greed. When you feel euphoric, you should be selling. When you're just absolutely sick to your stomach and you almost can't even bring yourself to look at the charts, it's so disgusting, and you're just repulsed by what you're seeing, this is when you should start accumulating. And we are now getting to that point where the vast majority of the average investor, they're just absolutely sick to their stomachs right now. So what they're doing is they are selling into fear. And that is the exact opposite of what they should be doing. They should be accumulating at these levels. When you look at the charts, what we are seeing is the charts are actually starting to bottom out. So a lot of people are actually capitulating and just giving up in complete disappointment, or the fact that they've lost massive amounts because they started buying at the worst possible time. They waited for the charts to go up, and once everything was in the green, they just kept buying and buying and buying and buying, thinking that it was going to go up forever, which we know is never the case. But now that we are right at the threshold of extreme fear, this is the best time to start accumulating these assets once again for the next leg up that is soon to come. And if you look at this chart, the Fear and Greed Index, you can see that it has not been at this level since its inception on CoinMarketCap. And I also wanted to go over a couple charts here just to kind of show you my reasoning and my thought process on this. It doesn't mean that I'm right, because I'm certainly not right about everything, but I have a certain way of doing things, and I'm extremely patient. And anybody who knows me knows that I am a master of strategy, and I try to keep my emotions off to the side and ignore those suckers like no other. But if we look at the Ondo charts, you can clearly see that we have what I call a tilted cup and handle pattern. Now, in a normal sense, a cup and handle pattern looks nothing like this, but this is a pattern that I've seen over the years, and many, many times I've seen this exact same pattern break out to new highs. Basically, it looks like a cup that's tilted to the side that has a run-up breaking the previous high, then dropping back down into or near the discount buy zone, which is basically a fair value gap at the bottom of the cup range, as we can see right here. Generally, it's marked out by weak dojis, which fits my grafting trading strategy. You can see one here, you can see a very weak one here, and that kind of marks the general range of that fair value gap. If you use fair value gaps, pay attention to that, because you'll notice that my grafting trading technique basically goes hand in hand with fair value gaps, especially at the bottom of the range. Now you can clearly see once the price hit this higher high here and started to decline in early December to the current price action we're seeing now, it actually fell back down nearly to the 0.786 Fibonacci range, and I think we're actually going to see this break lower here and most likely come to the range of this weak doji here. It may even go a little lower than that and actually fill this fair value gap entirely. But this range that we're in down here, this is your optimum buy zone. If you can start to accumulate in this range, it is highly probable that you're going to make a profit in the coming months and years. This Ondo chart looks absolutely incredible. I don't currently own any Ondo, but I'm thinking about making a purchase, even though it seems I continually say I've made my final crypto purchase, but it never seems to be the true final crypto purchase. Moving into XLM, you can see that we have this descending wedge pattern forming. Ever since the run-up from what I call the Trump election pump, we've been consolidating, which is a very good sign. And even though a lot of people on YouTube have called the bottom as of this candle here and this recent drop, I still do not believe that we've seen the bottom. I don't think the bottom's in. We're currently trading below equilibrium. Equilibrium trading is something that goes along with my grafting trading strategy. And you can see that we had a liquidity sweep here, which took out all the sell side liquidity from this range. And you can see that we have a weak doji here on this descending wedge lower trend line. What I expect to see is the price actually dropping down and touching this lower trend line, taking out this low and ending somewhere in the range of this weak doji. That's not a guarantee that it's going to happen, but I think that's what's going to happen. It may be a descending pattern like this that kind of continues gradually, or it may be one sharp tug coming into a liquidation candle, just like we see here heading into this lower range. But either way, it's a good range to start accumulating some XLM for the next leg to come. You never know when the bottom's going to be in, so you don't want to wait too long, because one of these mornings you're going to wake up, literally blink, and you're going to see a green candle up here trading into the equilibrium again. You essentially will have missed your opportunity to average your buys to get in the lower range. And when it comes to trading or buying or investing in cryptocurrencies, your multiple or your count is basically what yields higher returns. So if you have 1,000 XLM, you're not going to make near as much money as if you have 3,500 or 4,000 or 10,000. So that multiple is what's important. And the only way you can get higher multiples is to average into lower prices and increased buy frequency to bring those numbers up. A nice delicate balance of the two is generally the best way to look at it. And if you haven't noticed, I'm kind of a master of charts. I like to make lots of charts and analyze lots of information from different perspectives. But generally, when you have these wedge patterns, especially the descending wedge patterns, a lot of times, not every time, but a lot of times, they often have a 5-wave count before they break out on that 5th wave. So you can see here we've had 1 up, 2 down, 3 to the top, 4 to the bottom of the range, and if I'm correct and we go lower to this weak doji range, somewhere in this range, this line I've drawn out doesn't mean that it's going to be the exact bottom, but it just gives you an idea of about where it could be. But I think it's very likely that we're going to come down to that range, and once we do bottom out there, we could see this 5th wave, which will probably move fairly quickly out of this pattern and up above the new high that was set here. Now this is what I call the XRP roadmap to generational wealth. And if you look at the trend of XRP since it was traded, you can see that it is traded within this particular channel right here, between the white and the red being the best time to sell your positions, and being below the white on the bottom and the green being the best time to accumulate your positions. You can see we broke out of this wedge here. Now if we continue this trend of going up and touching into this top range yet again, as you can see these patterns tend to repeat themselves within this overall range, you can see that the likelihood of us coming back up to at least this white line, as crazy as it might sound with the price targets in this area, is very likely over the next few months towards the end of the year, which means that we could eventually see an XRP that could be valued upwards of $48, assuming that this pattern repeats itself. And as you know, the pattern that we're currently seeing on this breakout is most similar to the 2017 breakout that we've seen here. By breaking this new all-time high right here, essentially where we are in the pattern here is right here in this area. So it's my belief that we are less than halfway through this move, which seems to be indicating that same thing if you actually look at this chart overall. But it could push well past that 48, and as crazy as it might sound, this 285 level, if it did get in and start trading within this box pattern level, I would not expect it to break beyond this point here. I'm not saying that it's going to those levels, but as far as this chart is concerned, it seems to indicate that that has the potential to do something like that if it was extremely, extremely bullish. Certainly don't count on it, but don't rule it out either. And I just wanted to take another quick look at the XRP breakout chart. I pulled this up yesterday just so we could see this additional candle here, but it's very interesting when you compare this back to the 2017 breakout when we got up above this fair value gap right here, and basically it held the halfway mark and traded mostly on the area of the very top of the fair value gap before it broke out here on the 8th candle, breaking out of the range and going on to set the new all-time high that was recently broken, which only took a period of 3 months. This was the breakout candle, this was the candle breaking out of the range, this was the candle setting the all-time high, and the subsequent breakdown of that pattern. And you can see we are basically doing that same thing, holding this line here. And it wouldn't surprise me one bit if we saw some type of a breakout in April, being a type of a liquidation event is what I'm expecting, mid to late April to early May, that could come down and bounce and retest this upper trend line of this wedge pattern, which would essentially put us right in about that $1.20 level, even though I wouldn't expect it to last very long, similar as we saw here back in the 2021 breakout era. The price broke out, came back down below the breakout, below the fair value gap, and then broke out on the 8th candle subsequently for 4 months, going on to touch the top of the range, which eventually gave us the second point needed so we could form this upper trend line for the breakout that we're seeing now. So this is something very interesting, and if my thesis is correct and this pattern of 8s that has happened 4 times previously occurs once again for a 5th time, we will see the breakout right here in the month of May, which should be indicative of this move here or this move here. Only time will tell, and nobody's going to be able to tell you for sure, not even me being the designer of the XRP breakout chart. But I'll tell you, it's something I'm keeping my eye on, and the information will change and adapt and grow as we get more of it coming in. So this is something that you definitely want to keep your eye on, and I will be updating this early in March, and we'll be keeping a very close eye on it heading into the month of May. But I think it's very likely that in April we're going to see that liquidation style event, which could very likely take us to the top of this upper trend line. And depending on how deep they want to go and how bad they want to just bust everybody out so that they can keep people from riding this wave into this new accumulation of wealth into the new financial system, they might even take that sucker down here and bink it off of this gray fair value gap. So never underestimate the power of the controllers to destroy your financial security. They've got all the money, they've got all the means, they create the derivatives out of thin air, that put these derivative markets at, 200 to 300 times the underlying asset. Basically, the financial markets, as we've known them throughout our lives, are based on nothing but a complete and utter lie. They don't exist. They don't mean anything. It's all just your imagination. There is no value in it except within the underlying asset. And at the end of the day, no matter what happens, know what you hold and know where we are going. So thank you for watching this video. I appreciate each and every one of you. Have a great day.
Butters, do you have a problem?
All these bitches are kissing fellers, and they haven't figured out that they can be making some serious fucking money.